Welcome to the WTR Healthcare Happenings podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by Nick Sosiak, COO and CFO of Cannara Biotech. Also joining is my WTR Equity Research colleague, consumer analyst Linda Bolton Weiser. Cannara Biotech, Toronto Stock Exchange ticker symbol LOVE, OTCQX ticker symbol LOVFF, and Frankfurt Stock Exchange ticker 8CBO is a vertically integrated producer of affordable premium grade cannabis and cannabis derivative products. The company owns two mega facilities in Quebec with 100,000 kilograms of potential annualized cultivation output. Leveraging Quebec's favorable energy costs, the company maintains an efficient, low-cost production model. The company's products are available in about 50,000 points of distribution in Canada, and the company is rapidly gaining market share, now ranked number 8 with a 4% share of the national retail market in Canada. Good morning, Nick and Linda, and thank you for joining today's podcast.
Good morning, Tim. Thanks for having me.
So to kick things off, Nick, when you talk about the company's growth strategy, I've noted in the past that you emphasize that the company is different from your competitors. You have a measured approach to expansion and focus on product quality and profitability. Can you give us more color on how your strategy is unique and why it is leading to market share gains, please?
Absolutely, Tim. We live by the word focus. We live it, we breathe it, we focus every day of our operation, and we really lead from the top down. I'm CFO. We're actually in the process of finding an interim, a replacement CFO, and I've been hands-on in the company for the past 6.5 years, from the ground up, from building our first facility all the way to where we are today with over 200 SKUs. And our CEO, who's the founder and president of Cannara Biotech, is still our president, still CEO today, and is our master grower. He's in the operations every day, learning how to grow consistently and the most quality we can at Cannara. And that differentiates from any other business. There's no playbook in cannabis right now for large scale cultivation. We're in it. We're creating that. We're in that learning curve. We're writing that playbook for that in a couple of years. All the SOPs and will be set. So we really put a lot of love and passion in our work, and we've been doing that ever since we created the company, and live by the crawl, walk, run approach. We built our first facility. We invested in our first facility. We launched in Quebec, was our first market where our home base is, and we quickly became number one in that market because of the quality and consistency that we have built into our operation. And then what changed us really and put us on the map was the acquisition of our second facility, the Valleyfield facility. This is a 1 million square foot purpose-built cannabis hybrid greenhouse. And that's really, really key, is purpose-built versus any typical greenhouse, because cannabis cultivation, although it's a weed and it can grow, people think it can grow like a weed, to gain that consistency and quality of the product requires very precise techniques and cultivation protocols, which require very precise facility. And the Valleyfield facility was built for over $250 million. And in 2021, we bought it for $27 million. So that asset is prized to us and is really put us on the map. We built it up. We had access to 24 rooms, 24 zones of 25,000 square feet, allowing us to get to 100,000 kilograms of cannabis, or 1 million grams of cannabis sold in a year. And instead of turning all 24 rooms, we turned on each room as a separate zone, as a separate facility, one by one. And we started that in 2021 with one room when we bought the facility. And now today we're at room 14. And we have a 2-year plan to get to room 24 from here. And that's that diligence and focus, especially also in the fact of where we're targeting our product. a lot of volume got shifted internationally for, higher price product and better margins. And we still kept our focus in Canada, and we're still focused over the next 2, 3 years to keep growing in Canada and become a, number one or top three player in Canada.
Okay, thank you. That was a very helpful overview, and I have to say that's a remarkable discount you purchased that facility for, so well done. And with that, I'll turn it over to Linda.
Thanks, Tim. So Nick, let's just step back a little bit, and can you talk about the dynamics of the Canadian cannabis market? My understanding is it's growing around 6 to 7% per year. And maybe you could just outline the main segments of the market and how you're positioned with your three brands. And what do consumers consider when they make their purchase choices? And how's the pricing trends in the industry?
Yeah, so it's been a roller coaster for sure. And pricing trends in cannabis has been a roller coaster, first starting with overproduction. And I think with a lot of CCAA's closures of a lot of production facilities, the significant growth in international cannabis. 2 years ago, we were selling 40,000 kilograms internationally. Now we're over 150 to 200,000 kilograms of cannabis getting exported from Canada to internationally. So we went through a whole roller coaster, but I feel like we're at the bottom and now we're climbing back up in terms of price. We'll go into my brands in a little bit, but we're again very focused in how we target our products. And one huge volume driver in any cannabis market is large format dried flower, so 28-gram packs. They sell for the discount at the lowest margin, but they move significant amount of volume. And for the longest time, no matter how I worked my numbers, I could not get it priced to an appropriate gross margin that I felt comfortable launching a 28-gram product. So we built our, out of that 100,000 kilograms, we're at like 55,000 kilograms produced and sold. We have minimal, I think I have one or two SKUs that are 28-gram bags. So now I've recently revisited that SKU and I've noticed my competition increasing prices because they can no longer, they used to buy cannabis from another producer and then sell it, for 10 cents, 20 cents margin. But that supplier no longer exists, and then prices of wholesale starts to come up, and then they can't afford to, lose money on that product and they discontinue it. So I've seen that shift, and we're for the first time launching a couple, 2, 3 now new SKUs in the large format category, which moves significant amount of volume even with so few SKUs. So that's our next leg of growth. Overall, I think we're in a very healthy position in the Canadian market. It's heavily regulated. We used to be a lot of players. 80% of the market now is held by the top 10 players. So it's a small group, and now it's, survival of the fittest, and who can innovate and keep producing better quality product. Innovation is key in cannabis. Who's finding the next new products and the next new genetics, and who can keep, the numbers working. And as we grow, we're at the halfway point in our business. We're still achieving economies of scale with our facility, right? So not only are we seeing price compression turn around, we're also seeing economies of scale on our side, which allows us to compete even better into these categories. So that's overall, like the market's extremely healthy, like you said, 5 to 7% growth per year. I think that's where we're seeing over the next couple of years. There's not going to be a huge inflection point over the course, but 5 to 7% a year. Where dried flowers, it's really about between dried flower, pre-rolls, and extracts, vapes were pretty much 30 to 40% across each category, plus or minus. So we play in all those main categories. We're not really in edibles and beverages. They're a very small percentage of the market. We play in dried flower. We play in pre-rolls, which is a growing market, especially infused pre-rolls. Convenience is really key. All-in-one devices for vape extracts. We definitely are innovating and leading charge. We're growing the product production, and we're processing everything in-house, which very few players in our industry are doing it fully vertically integrated. And we have 3 flagship brands. What's unique about us is that we created these 3 flagship brands in 2019. I started the company. I remember creating those brands with the marketing team. And these are the same 3 brands that scaled from 0 to $140 million plus revenue, right? So Tribal is our main flagship brand. It's all about genetics in cannabis, unlike alcohol or tobacco, where the consumer kind of goes through their navigation of product and then chooses their product. Of course, they have, special products for special times, but their daily consistent product is usually the same product in tobacco or alcohol. In cannabis, the way the cannabinoids in your endocannabis system works, uh, you need variety. The customer, after a while, will stop to experience the same experience that they had with your product, and that's just naturally occurring. So you need to be always there for that customer with the next type of product that's going to give them that experience that they're looking for. And then that existing product is such high quality and consistently produced that when they're tired of that second product or third product, that they come back to the first product because they liked it so much and they re-get that feeling again. Because cannabis is all sorts of terpenes. Your body has the endocannabinoid system. Those terpenes attach. Your body gets used to it. It needs another blast of terpenes to reset and forget about it, and then go back. So we need to understand that's what Tribal understands. Finds these genetics, phenohunting. And phenohunting, I've said it in many podcasts, is key to any cannabis company success. It's the ultimate what's behind the product that you're selling, right? So if you're taking the same genetics and seeds that everyone else is using, well, you're going to end up, no matter how well you do your cultivation cycle, with a very similar product as the rest. So going through these genetics and finding this, there's there's maybe 1 or 2 sources out there that are doing that for other LPs, but then again, all LPs are going to be licensed producers, are going to be going to that same source and ending up with the same product. So there's no playbook for that genetic search. So we have to do it. So that entails carving out revenue rooms that we're saying, okay, well, these are not generating revenue for the moment. We plant seeds from all over the world that we're looking for, and we go through a 4-month process to grow that genetic, test it, evaluate it, regrow it again to make sure it grows again, and then commercialize. So that's a 1.5-year process just to find these new genetics, and the market's always wanting them every year, right? So multiple every year. So that process is very key to a cannabis company, and we're really focused on it, and that's what my Tribal brand is. My Nugs brand is focused on large formats of more value, same quality. We don't really have a different quality proposition. It's all highly quality and consistency. It's just that Tribal focuses on genetics, Nugs formats on big bulk formats, larger formats to give even better discount, and Orchid is our wellness brand, more focused on CBD products.
Great, thanks. So recently, the company made an announcement that you got a supply agreement with Curaleaf, more than $20 million. Can you explain how this affects your expansion strategy, and what does the capacity ramp up look like? And maybe you can share some of the economics behind it, like CapEx requirements and revenue per room or zone.
Absolutely. So Curaleaf, as I'm sure you're well aware of, and your viewership is well aware of, if their focus on the cannabis industry, is one of the largest cannabis companies in the world, focused in the U.S. and international markets. They have a small establishment in Canada for EU GMP. But they are a large cannabis company and focus on international markets, while we're focused on the Canadian market. We also got a huge facility, a $250 million plus facility for $27 million, and we have a crawl, walk, run approach to development. So, and our focus is on Canada. So where that partnership came to be is that we do have unutilized capacity, not because we have a plan later for it, but in our short-term frame, if we're looking, we have unused capacity and we're building into it, and we want to move it all along. So we were always looking for a partner to help us explore what phase 2 would look like for Cannara. Once we dominate the Canadian market and we're fully built out for Canada, there will have to be a phase two for Cannara, which is international markets, the U.S. markets. We will have written that playbook of large scale cannabis production, scalability, genetics, brands proven out, and we will have that playbook to go international or to go to the U.S. So we were always looking for a partner that would allow us to gain that knowledge and help us figure out how the international markets works while keeping focus in Canada. And that's what Curaleaf is to us. They're a great partner where they committed to $20 million over the next 2 years of cannabis. They've evaluated our cannabis. We've shipped it. It's for international markets. So we're growing it. We're sending it to them internationally, and they're able to fulfill their SKUs with high quality, consistent cannabis. And at the same time, that allows us to generate revenue from unutilized capacity that we were growing into and reinvest in Canada, in addition to them being our sponsorship for EU GMP. And EU GMP is a key certificate that is only given by existing holders of EU GMP to facilities in Canada that allow the export to international markets. And Canada right now is one of the few international hubs for export of cannabis. So this EU GMP license, they're going to be our sponsor and are going to help us give us the application to license Valleyfield, our whole drying process, 200,000 square feet of GMP licensed drying capacity and processing capacity that eventually we'll be able to utilize to send even more cannabis international, and figure out our phase two of what does Cannara look as an international entity.
Great. So Nick, you have a pretty healthy balance sheet. You've got, in the last quarter, I think it was over 20 million of cash, and you've got some debt, but a pretty low debt to EBITDA ratio of just about 1.2 times. I'm curious what your plans are for your use of excess free cash flow, because it sounds like you can actually fund your growth internally. So what do you plan for the excess cash? Is there any M&A in your plans, or share repurchase? What are your thoughts there?
Yeah, so we just announced an NCIB, so our share repurchase program over the course of next year that the company is going to be going into. But more focused is our CapEx investments in order to double the growth. Again, we're at 55,000 kilograms produced, 58,000 kilograms that we just turned on. We were at 12 rooms. We just turned on 2 rooms in the past 2 months. So we have, we can scale to that 24 rooms. That requires CapEx for those rooms to scale in. They're already built out, so it's not much CapEx. It's about $1 million per room. And each room can generate over $10 million of revenue within the year it's turned online. So we have 10 rooms to turn online over the next course of the next year to 2 years. And even if you turn on your rooms, and what super important, and what a lot of growers and cultivators forgot, is the dedicated space to drying and post-processing the cannabis. You spend 3 months growing the cannabis and investing all the money to grow the best cannabis that you can, and all that could be put into the garbage if your drying process does not work. So you need large rooms, especially for the scale that we have. So you need a lot of square foot, and that's why we have a 200,000 square foot processing center dedicated to all these 24 rooms. We invested about $10 million in 2026 in that project, and there's another $20 million to invest to turn on all the drying rooms and all the processing rooms and double our extract capacity and trim the 100,000 kilograms. So between that and the actual cultivation zones, we're looking about $35 million of additional capex that we're going to be investing into the operations. And then on the M&A side, I mean, find me another 10 cents on the dollar facility. We'll be
Mhm.
in the market all day long to buy it up. But otherwise, we have that, the tunnel vision of focus on execution of the Valleyfield plan, and M&A opportunities do fly across our desk every single day, and we evaluate them and we look at them. But, we're going to be value investors, especially for any M&A activity.
Okay, makes sense. Um, Stepping back again a little bit, just to close on sort of a bigger issue in the United States here, there's some actions being taken for the possibility of cannabis switching to a Schedule 3 drug from a Schedule 1. Do you have any opinions about whether that will happen, any timing, and if it were to happen, how would that affect your long-term strategy?
Yeah, I'm just a Canadian north of the border, so the amount of press and stories I've heard and roller coasters again I've been on trying to follow if this is going to pass or not. I kind of gave up and I said let what will be when it will be it will be. We have a plan for the next 2-3 years to focus on Canada, build out Canada, build out the 100,000 kilograms, sell it in Canada, build out that playbook that I keep talking about. Because again, there's not many companies out there in the world building out that size scale of cannabis production that's cultivating. Because you could sell cannabis, but if you can't cultivate high quality cannabis and consistently and innovate on genetics and control that supply chain, it's extremely hard to build a cannabis CPG business. So I think we're one of the few that are building it all as a fully vertically integrated platform, and we're doing it right. And I think that that's going to be transferable to other markets across the world. And which markets, when, where, how, that's all left up to time right now. We have that in the playbook. Focus, build it out. If US legalizes it next year in 2 years, still focus on Canada. Once we finish Canada, then US would probably be the next market. But if not, then there's so many international markets to continue expanding. And then when the US decides to open up and we finished in Canada, we would be there to build to set our footprints in there.
Great. Thanks, Nick. It's been very informative and a very interesting discussion. Thank you very much for joining us. Tim, back to you.
Thank you, Linda. And Nick, thanks so much for joining us today to discuss Cannara Biotech. Very interesting story, and wish you the best in the back half of 2026 and continuing to grow.
Thank you, Linda. Thank you, Tim, for having me. It was a pleasure.
Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Healthcare Happenings podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.